just ain't right. Gonna tear it down, gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a shame. I won't play by their rules, I won't comply. Anarchy's the way. It's time to fly. I'll burn down the walls and break the chains. Shatter the
And here we go. Welcome. I am Matt. This is the Anarchist Investor Live, coming at you every Monday through Friday at 12 Eastern. We talk about contrarian investment, markets, the economy, how to protect and grow your wealth without getting it stolen by some dirty, dirty banksters. I had on the hold screen silver, and I think maybe I'm going to keep silver on the hold screen every day until it's not a thing anymore. Silver broke through 32. It tried to challenge 33, didn't get there. But right now, silver is trading at $32 per ounce. That is absolutely insane. Absolutely insane. The the track record of silver obviously is a little bit hairy in that a lot of the time people have said, oh, silver is undervalued and it needs to go to this, it needs to go to that price, et cetera, et cetera, et cetera. And then it never follows through. Like it's always disappointed for a long period of time. Now we have people talking about how the manipulation in the market is falling off, that the artificial ceiling that's been put on the top of silver for so long is beginning to crumble. I have my fingers crossed. I'm knocking on wood as much as I can, because if that's true, then that means that silver literally is going to the moon. But right now, the near-term price target, as I've kind of pointed out in previous shows, is $35 an ounce. So we're going to continue watching silver, and as long as it continues to be strong, it will stay on the hold screen, just out of sheer, we'll call it, superstition, to try and keep silver up there and keep it going. So, yeah, silver over $32 an ounce. Absolutely love that. And we're going to keep watching to see how far it actually ends up going. I would like to see, I was just looking at the weekly chart before we went live, and I was like, man, this thing's looks like it might be starting to get a little overextended, but I mean, it's not really overbought yet. We're still in the 70s as far as relative strength. This thing could pop through to 35 and get to my price target. Somewhere along the line, we have to come back and revisit $30, unfortunately. Silver will have to come back to reestablish whether or not it was a valid break of $30 to the upside. So somewhere along the line, this thing's going to have to come back down to earth in order to then move higher, if it's going to into the future. And I seriously do think it is going to move into the future up to 35 and beyond. But so that being said, I'm going to pull the banner down. I'm going to pull the screen share down. But that is a reminder that you should help me out with the algo. Give me a subscribe, thumbs up, a like, a follow, a share, anything you can do to help out. A review on the podcast would go so far towards helping me out and helping get this information out to as many people as possible, because I definitely think that we're headed for financial, at least financial hard times, if not a financial calamity. And I think there's some big, big missteps happening. There's always missteps happening in centrally planned economies. And I think there's some huge missteps happening right now. And we're going to see kind of how things are headed right now with pricing. And there was actually, I didn't pull it up. There was a tweet out of, I think the X account is called like Biden Wins or something like that. And there was a tweet, and I am stuffy today because my allergies are going off the charts. But the Biden Wins Twitter account posted something along the lines of, grocery store prices plummet, right? And that being a Biden win. Well, I don't know. You tell me. Are grocery prices cheaper in your neck of the woods? I really don't think so. Not to mention the fact that I think we've seen gas percolating higher here as of late as well. And so, there's a couple of places in the country now where we got $4 plus gasoline pretty regularly. So we'll see if that continues. Gas is a little weak today, but like I said, we'll get to charts in a minute. But so I do want to focus on a couple of news articles that have come out of Yahoo Finance today. And it points to what I think is a very foreboding sign for where we're headed in the real economy. Wall Street, obviously, and the casino is not exactly tied at the hip with the real economy. It does not reflect reality. It reflects what's happening in the casino, which can be completely different than what's happening for you and I. And so the first story I'm looking at, this was actually penned by out of Bloomberg. The title is Red Lobster Chain Goes Bankrupt After Unlimited Shrimp Deal. No, the unlimited shrimp deal was not the only thing that caused Red Lobster to go bankrupt, though it was kind of the nail in the coffin if you read into this article. To start, seafood restaurant chain Red Lobster filed for bankruptcy, succumbing to onerous leases, high labor costs, and a disastrous unlimited shrimp promotion. The Orlando, Florida-based company filed for Chapter 11 protection on Sunday, listing assets and liabilities of $1 to $10 billion each in its bankruptcy petition. The filing allows the company to keep operating while it works out a plan to, and it says repay creditors. In a lot of cases, that means restructure. Okay, so there's a lot happening here. All right, first of all, is the retail customer is tapped. So that's negatively affecting Red Lobster. And actually, Red Lobster has been somewhat of a declining brand over the last at least 10 years, if not 20. Reached its heyday in the 90s. Everyone loved cheddar biscuits. And in fact, what probably prolonged everyone's love of cheddar biscuits might have been the invention of Lipitor. But Red Lobster is peaked a long time ago as a restaurant chain. But what you're seeing in the present day is you're seeing the consumer is obviously having issues. The leases, in terms of the commercial real estate property or locations that Red Lobster was occupying, they were locked in at high rates or ever increasing rates because of lease costs that have been rising as of late. And in a lot of these cases, if any of these Red Lobster, and I believe they said Red Lobster operates about 550 locations. If any or a lot of these locations end up closing up, that then becomes a pretty large tenant that won't be paying their lease. And they might even have lease payments in arrears that they haven't paid. And so we'll see what this negotiation process looks like going forward. But so you have a commentary on the consumer, you have a commentary on commercial real estate and what that looks like going forward in terms of restructuring these properties, whether there's mortgages on the properties, main renters or tenants or leaseholders, are they paying? Are they having to restructure those leases, right, moving forward? You got to remember a lot of these commercial real estate locations, their valuations and the money that was lent to the developer or the current owner was based off the cash flow. And so if that cash flow is diminished or if it completely ceases, then what happens to the overall value of the property? And the obvious answer is it goes down, right? In some cases by 40, 50, 60, 70%, depending on how bad the situation is and how overzealous the purchaser and the borrower were when they purchased the property. So Red Lobster it's not going away completely, but it is bankrupt. So you're going to see a much, they'll probably try and sell it as like a leaner and meaner franchise or brand coming out of this. But really, at the end of the day, what you're seeing is a huge amount of downsizing. A lot of people are going to lose their jobs. A lot of debt is going to have to be written off. So that is the Red Lobster story. Now, let's also look at what's happening over at Target. Well, Target, which is where a lot of people had been shopping for groceries and other things at Target. And I think a lot of people have been trading down to Target. Well, now Things at Target aren't great because people who traded down to Target are now trading down to Walmart for their groceries and their everyday items and things like that. So, this story out of Reuters says Target is lowering prices on 5,000 items in a bid to lure more shoppers. Target will be lowering prices on at least 5,000 frequently shopped products across its assortment ranging from milk to diapers. The big box retailer said on Monday as it looks to attract budget stretched customers. That's right. People are so stretched in terms of their budget, they can't even shop at Target anymore for their groceries. Now they have to shop at Walmart or even cheaper brand or retail locations to go get their food. This is beginning to become a much bigger trend. And again, the wealthy have not really been impacted by this marketplace just yet. However, there was just a story out of Walmart talking about how they see their average customer in terms of the average income of their average customer is creeping higher. You see people that are, upper middle class, even within the wealthy segment, going to Walmart for some of their groceries. Dude, shit's difficult. If you have a hedge fund manager next to like the typical Walmart customer and they're both shopping at Walmart for their groceries, stuff's bad. It ain't doing too good. And Target is trying to lure some of those customers back. The ones that had traded down to Target now have traded down to Walmart. They're trying to drag them back into the Target store, and we'll see whether or not they're successful or not. But if you notice, this is adding to a theme. And the last story that we have in this theme has to do with Apple, right? So we're not just talking about restaurants. We're not just talking about groceries and like tchotchkes and stuff that you get at Walmart or Target. But what we're also talking about is smartphones. Now, this story has to do with China specifically, but this is not going to be just relegated to China. This will continue. This trend will continue into the United States. It'll proliferate throughout a lot of the rest of the world first, but it will come to the United States. Another story out of Reuters. Apple slashes iPhone prices in China amid fierce Huawei competition. Now, part of it is competition. Part of it is also just the dire circumstances of the Chinese economy. The Chinese consumer got bit by their real estate Ponzi scheme, and the Chinese consumer is also having problems because I don't have them available, but if you pull up the consumer spending numbers from China, they're not good. They're not good at all. China just last week had to announce, more attempts to try and bail out or at least create a safety net underneath the real estate market, because that's like 60% of their economy, and it's in the gutter, and they're trying to fix that problem. The Chinese consumer is not doing that great. Okay. But to carry on here, out of Reuters in Beijing, Apple has launched an aggressive discounting campaign on its official Tmall site in China, offering discounts of up to 2,300 yuan, which is a $318 discount on select iPhone models. The discounting comes as the U.S. tech giant seeks to defend its position in the high-end smartphone market, where it faces increasing competition from local rivals such as Huawei. Well, Huawei sells similar smartphones, I believe, at a slightly lower price point. And if you notice the trend here, Apple, as well as these other retailers, like in the United States, Target and Walmart, not only are they seeing declining sales at the register, they're seeing their overall share of the marketplace be threatened by what's happening financially and economically. And so they are trying to defend that market share. And they're doing it by cost cutting, by price cutting, and then also cost cutting. Well, we haven't seen it show up in the government numbers yet, but I think a lot of people anecdotally have already been showing the unemployment picture in the United States as well as throughout the world is not good. It's ugly in many cases, depending on what area you live in or what industry or sector of the economy you're used to working in. It's not good. And so typically what these companies will do in their last ditch effort to retain market share and retain profits they will cut headcount. And once they're done cutting headcount, they have to deeply cut prices just to keep people spending and keep revenue coming in the front door. So this also kind of leads to my thesis that either this first quarter of 2024 or this second quarter that we're in right now financially, I think corporations' profits have topped out. I think their profit margin has topped out. And I think you're going to start to see an about face, which is going to coincide with the recession that's hitting here in the United States. And these are just all stories that are pointing toward it. Now, the good news is that this means a stronger dollar, which in terms of pricing means that things should get cheaper. Okay. There should actually be not just disinflation, you may see some large bouts of deflation, at least in certain areas of the economy. Now, it's too late. It's not going to save the economy, but at the very least, it's giving a little bit of relief in the meantime. And so moving forward, this will continue to be a narrative. It will continue to be cost cutting, more competitive marketplace, weaker consumer, less discretionary spending. And you'll see a lot of these companies that were, involved in this boom that went from 2020, 2021 with all of the stimulus spending and everything like that. A lot of these companies, the weakest ones, like the Pelotons and the fly-by-night kind of fad companies, they boomed and bust really quick, right? You're going to see some of these other companies that benefited a lot, like Apple. This week, the casino is waiting with bated breath to see NVIDIA's earnings. I do not think that NVIDIA's earnings are going to be like awful by any stretch of the imagination. I think they made some really crazy promises in terms of how much money that they're projected to earn in terms of revenue. But I also know that NVIDIA has its own little Ponzi scheme going on. I did a article about it a couple of months ago on Nobody Special Finance. He did two investigative journalism kind of episodes on his YouTube channel, talking about how NVIDIA was basically taking a small amount of company, giving it a seed capital to a small startup, tech firm, AI firm, cloud computing firm, whatever they wanted to call it. And then that small firm would take that small amount of seed capital, leverage it up on its balance sheet, and then turn around and buy NVIDIA chips. Okay, so NVIDIA was able to take, say, $1 billion and turn it into a $10 billion chip order, which then on top of that $10 billion chip order, they were getting something like a 20x of sales. So they were able to take $1 billion in actual cash on their balance sheet and turn it into $200 billion worth of market cap. This is a freaking Ponzi scheme. Okay, this is why I tell you the casino it's not real. It's fake. It's made up, right? Like this is nothing but games. It's illusions, right? And smoke and mirrors. NVIDIA, I don't think their earnings are going to be that bad this quarter. I do think, along with the rest of the marketplace, you're going to see their profitability top out. And I'm actually expecting within probably the next like 12 to 18 months, once the economy starts to turn down, or at least once the powers that be accept that the economy is turning down, you will see SEC investigations into NVIDIA, as well as a number of other companies that are participating in this kind of conduct, because it's basically fraudulently overinflating the value of their stock, which is benefiting a handful of people, and it's eventually going to hurt a lot of people if they don't understand that that's the case and they continue to chase the stock price higher. All right. So that being said, I'll get down off my soapbox. Let's look at the markets. A reminder, I am giving away four annual paid subscriptions to the Anarchist Investor Substack. So if you get in at least as a free subscriber, you'll be enrolled in that drawing. It's coming up on June 3rd, and each one of those subscriptions is worth like $99. So I'm giving away $400 worth of subscriptions to the newsletter. You can subscribe for free at anarchistinvestor.substack.com. All right, we looked at silver already. Gold is up to a little bit and continues to be strong. Silver has been outpacing gold, and thus the silver-gold ratio is dropping, which is a good thing because that's what we anticipated. That's what we're looking for. I would say we are sitting at 24.30 in gold. The silver to gold ratio, I'm just showing you the weekly chart here. You can obviously see that huge move lower as silver has had such a big rally. The silver gold ratio is at 75. I would say once it gets to 70, now kind of the math flips a little bit. All right. And it also flips in terms of I would still be, like actively dollar cost averaging into a stack of, gold and silver. I would say once we get to certain levels, like 2,500 or 2,600 in gold, I might think about taking a little bit of profit and holding some dollars in order to see what happens next. Silver, once we get in that $35 range, I might take a little bit off. I might liquidate a little bit just to hold some cash to then wait and see what happens. Like I said, if silver goes straight to 35, sometime in the near future, we have to revisit 30. So you could see a pop to 35 and then it pull back to 30. So if you get that opportunity, I mean, it might be a tight window too, but that's something that I'm watching here moving forward. The casino's up today. I mean, it's a Monday, number go up. Like everyone just puts money to work on a Monday because they think everything's going good. Now that doesn't happen during a financial crisis, but no one knows that we're in a financial crisis just yet. So it continues to be the default case, which is up and to the right in the casino. So most of the averages are up. Interestingly enough, the dollar is flat to slightly up right now. Again, I think the dollar will probably maintain some strength here, even though it's been weak as of late, because, when financial times hit, rough financial times, people run for lifeboats. And the dollar, believe it or not, is still a lifeboat for a lot of people with very deep pockets. So continue to watch the dollar. I would say we're actually probably what causes the final straw to break the camel's back this go around is going to be something similar that happened in 2018. There is a shortage of dollars in the system. And people are like, well, how the hell could that be? We printed all this money. Well, yeah, we printed all the money. It has very low velocity and it's warehoused in a bunch of places. One of those places is in U.S. Treasuries. The United States government continues to spend like drunken sailors. Every single one of those treasuries means that there's dollars that either were in people's hands or had to be created in order to buy those U.S. treasuries. Well, they've generated so much debt that all of the, stimulus spending, et cetera, has effectively just been rolled into U.S. treasuries. A lot of the wealthy people in this economy are taking a huge amount of profit off the table, off the top, after the casino has run up so much, and they're locking it in at 4 or 5% federal tax protected yields in U.S. treasuries. So that basically means that there's a shortage of dollars floating around in the system, and as soon as there's a run to try and get dollars, especially if, say, the unemployment numbers start to pop higher, if all of a sudden our inflation numbers turn to deflation numbers, any one of those instances is going to cause, another large financial failure, bank failure. Any one of those instances could cause a run on U.S. dollars, which could mean that the financial crisis finally kicks into full gear, and it's because of essentially a lack of liquidity in the system, which, by the way, is something the Federal Reserve has been looking at, trying to fight, and failing for the last going on almost 20 years. So we'll see how that resolves itself. Obviously, it's probably not going to resolve itself well. But again, we're going to continue watching the dollar for some indications there. Oil is down slightly today. Again, oil's just kind of like marking time here. It fell. It looks like maybe it's putting in a little bit of a bear flag. But again, all bets are off as soon as the Federal Reserve says that they're cutting rates. If they start to cut rates, people are going to put money to work. But if they're cutting rates, people aren't going to put money to work in like long-term investment type stuff. Okay. I actually covered this Friday in the episode, as well as I've talked about it in some past articles. The Cantillon effect, biflation, the idea that money could flood into the system, or money in the system could be, thawed, so to speak. But where does it go? Is it going to go into like infrastructure and, building out the next cloud computing firm or something? Not likely. It's going to go into things, you've seen a lot of these things rally already. the silver and the gold and the copper trade. All of these things are moving higher because money's being put to work. But a lot of people actually identify that it's dangerous to put it to work. It's bad risk management if you put it to work in the stock market, or if you put it to work, taking a long shot on a small startup company. A lot of that money is going into secure stuff if it's not going into US treasuries, right? And so oil could benefit from that. The moment there's some kind of rate cut, or at least anticipation of a rate cut, you could see oil spike, and that could also be the final straw that breaks the camel's back. So continue to watch oil. It's a little bit weak today, but like I said, gas has been actually going up recently. And believe it or not, even though it's pulled back from these highs back in April, even though it's pulled back, gas continues to be, at least have some buying pressure behind it. Okay. We're also going into driving season. So, the other angle here is if all of a sudden oil and gas plummet, that's not a good sign either. And we already know that part of the weakness, if not a lot of the weakness here in gas and oil, has been, the consumer's weak and buying is weak. And so there's no buying pressure as far as that goes. The buying pressure exists because there's a certain amount of energy we need in the economy just to keep things going. And there's not a huge amount of supply coming online. In fact, in a number of places, they're restricting supply. And so that's what's put a floor under this. Not to mention the fact that, remember, the White House effectively spent down or deployed almost the entire strategic petroleum reserve. They have to buy that back at some point, especially being in, proxy war in Ukraine and having to support other countries that might devolve into, supporting Israel and what's going on in Gaza. That might devolve into, a war or some other kind of conflict. They're going to have to replenish that as well, which is more buying support here for oil. I would expect oil to go up before it collapses. But again, all bets are off if it just goes straight down. So continue watching that. All right. I mentioned a lot of the other commodity plays. I'm not really going to talk too much about that stuff anymore. We will look at fixed income really quickly. High yield bonds are flat today. They're not really doing anything. Again, we're just hanging out at this resistance line. Even though the casino's going up, high yield bonds have not been able to significantly rally. All right. And you might be looking at the last handful of days of action and be like, well, it rallied off the low here, but this was just kind of relief, right? At some point, people were like, oh crap, the Federal Reserve might raise interest rates. Okay. This relief rally could just be people be like, oh, whew, man, dodge that bullet, right? But now we got to worry about the next bullet being a crappy economy. The stock market's hitting all-time highs, and HYG is not. Okay? HYG is not moving higher. It's putting in a lower high. This is a divergence. And so when this divergence appears, it's a clue. And the clue is that when big money isn't buying the debt of these riskier corporations that are out there, yet the casino is moving higher, the real economy is probably not in a good spot. All right. So continue to watch this. HYG is flat today, but again, continue to watch how it reacts around this resistance line that's sitting right over the top of it right now. We'll see whether or not it begins to decline again or if it can pop back through. TLT. All right. So TLT is actually, I think, going to be, I do not advocate people put money to work too much in the casino, but the TLT ETF, if you can stomach it, is a play on the price of the 20-year U.S. Treasury. And I believe that you're going to see, with Fed rate cuts, you're going to see rates drop on treasuries, which means the prices are going to go up. And so 20-year U.S. Treasury was a really good buy down here when it was falling apart back in October of 23. This year in April, same deal. It was falling. It was actually a good purchase. I think TLT is actually going to be a good purchase moving forward, because even if the Federal Reserve doesn't just cut rates to the bone, they're still going to cut. And I think that there is a pent up demand, or at least how should I put it? There's a pent up, basically buying pressure, where a lot of the buying recently has been in the short end of the curve. And so I think that once those short end rates begin to drop because the Federal Reserve's cutting rates, a lot of that money will get deployed into other types of investable assets like gold and silver and oil and things like that. I think a lot of that money will also flow into the longer end of the curve. And so you'll see, some money go from, you see a lot of buying in the 2-year and the 5-year, but I think that you're also going to see a lot of money that's been sitting on the sidelines buy into, say, like the 20 and the 30-year as well, expecting that, the yield curve is going to de-invert and it'll go really fast into the 2-year, 5-year, and 10-year. Once that move happens, the next pin action to happen will be the 10 and the 20-year and the 30-year. And so TLT is actually a pretty decent buy, I think, here. Again, if you can stomach it by putting money into the casino and putting it to work there. Treasury yields are slightly up today, which means there's a little bit of selling today. We'll see how that plays out. Again, a lot has to do with, I think corporate profits. A lot has to do with specifically the unemployment numbers, as well as the dollar and oil. Those three things are really going to be huge determinants of where interest rates go. And even more so than I would say, just the straight CPI numbers that a lot of people pay a ton of attention to. All right, let's round things out by looking at crypto. Bitcoin is pretty decent today. It's got a bid. It's been a handful of days here where we've been nice and strong at Bitcoin. This is telling the same picture, or telling the same story that the casino is telling right now. They're saying it's risk on, and part of the reason why it's risk on is they're anticipating that sooner rather than later we're getting rate cuts. Okay, again, that's a hollow gesture on the part of the Federal Reserve, because typically those rate cuts, one, don't have a direct effect on the real economy, and two, usually the worst losses in a really bad financial crisis type scenario happen after the Fed cuts rates the first time. And typically the Fed doesn't cut rates because they want to. They cut interest rates because they have to, because stuff's falling apart. Okay. And I've already laid out the scenario. A number of different things could cause the Fed to have to move in that direction. We'll see what it is, but when it happens, obviously I'll call attention to it. But Bitcoin's strong today because a lot of the tech stocks are strong today, and a lot of people are putting money to work in risky assets or perceived risky assets. Bitcoin Cash is behind a little bit. Ethereum's behind a little bit on the day. In fact, the entire crypto complex is slightly lagging Bitcoin, which again means that Bitcoin's leading and the rest of crypto is just struggling to kind of like keep up the pace. Solana is actually really strong today. So Solana continues to move higher. And like I said, usually as a pair, if Solana is strong, either the same day or the following day, Avalanche is strong, or vice versa. So you see Avalanche catching a little bit of the bid. Avalanche might actually be a good trade here, though I don't advocate for trading on this channel. I think that if you're going to have a piece of your portfolio in crypto, you should be a value averaging kind of person. Each month you put a little bit to work. The months where you feel like it's undervalued, you can reallocate what you would normally, value average into all of your assets all your investments every single month. Reallocate. The things that are overvalued, take a little bit, maybe not 100%, but a little bit from what you would normally buy every month on those things, and reallocate it to the things that you feel are undervalued. If you feel that Avalanche is one of those things that you want in your crypto portfolio, it either is now or it will be in the near future, and you want to start to build a position, now might actually be a good time to start piecing into Avalanche, because like I said, when Solana is strong, typically Avalanche follows it, if not the same moment in time, just shortly after that. Everything else is somewhat weak in the crypto complex that I'm looking at. Actually, huge news as I reach off camera here. I have 2 more miners that show up. So my Dymo miner is here. I have to set this up in the car. So that's another one of the passive crypto miners that I'm going to be running to effectively earn crypto by monetizing the data that I create on a day-to-day basis. And let's see if I can get this big boy up here. This is my Fry miner. And I don't know if you can tell from the picture, but it's basically like a weather satellite kind of situation. You put it up on your roof, and it measures things like wind speed and temperature, humidity, a couple of other things. And as a result of putting that data into the Fry blockchain, into the Fry system, they are able to better better project weather patterns. They can use it as a check on when there are predictions, whether or not that actually ends up being true, real-time weather updates, et cetera, et cetera. And so you earn crypto for that as well. So I'm going to be setting that up as well. So a little bit more on that in the near future. So with that, that's really all I'm looking at as far as the markets are concerned. I'm glad I was able to get through today without like sneezing my head off, though I know I'm nasally on the recording. So I'll apologize for that. But if you did make it to the end, I want to say thank you so much for your time, attention, and energy. And if you would, do me the huge favor of giving me a subscribe or a follow or a like or an upvote or a share. And that would be a huge help for me and the channel. So with that, that's all I got. Happy Monday. We made it through Monday. I will be back here tomorrow, Tuesday at 12 noon Eastern, talking some smack about the Federal Reserve. And we'll have some more insights as far as the market's concerned and how we can continue to deploy some money and make some money. I got to tell you, loving silver. Where are we at in silver right now? One last price check. I just can't help myself. $32.08 on silver. So let's see how the next couple of days plays out for silver. I'm rooting for 35, baby. If we hit 35, might have to throw a party. So with that, we'll be here again tomorrow to check in on the price of silver as well as the rest of the markets and to help you out with some stuff. So love you. Appreciate you. Peace.
Stuck in a system that just ain't right. Gonna tear it down. Gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a shame. I won't play by their rules. I won't comply. Anarchy's the way. It's time to fly. I burn down the walls and break the chains. Shatter the illusions. Expose their games. The stock market's a stage. I'll steal the show with my rebellious spirit. Watch me grow. Burn down the walls and break the chains. Shatter the illusions. Expose their games. The stock market's a stage. I'll steal the show with my rebellion.